Hey guys, how's it going? So in this video I'm going to be talking about how Canada is going into recession, possibly going into recession, and banks are, I guess the Canadian banks are going to basically go down 50% or crash. So I'm going to make a video, and I'm gonna start off with this guy who's on BNN Bloomberg. He's a US fund, and he's talking about how he's short selling the Canadian banks because he believes that the Canadian banks are gonna drop down at least 50%. This video was released on January 20th, 2009. Ever since then, the stock market has been rallying, so he's been wrong for at least a good week. Let's see if he continues to be wrong, but let's play the video and let's see, and I guess I'll explain along the way.
A real focus, though, for us here in Canada in our markets is what's going on with the Canadian banks. And there is another short seller coming after the Canadian banks. Denver-based Crescat Capital cites the Canadian housing market helping to lead the Canadian economy, into a recession. However, the big six banks have managed to prove the naysayers so wrong in the past. Joining us now to discuss why he thinks now is the time to strike is Kevin Smith. He's the founder and CEO of Crescat, a hedge fund based in Denver, $53 million in assets under management, and a very good track record last year. Good to be with you, Kevin. Thank you.
I like how she said a very good track record last year. So, let's see if he's right. I don't know. But then he's been proven wrong before, so anyways, let's continue.
Thank you very much for joining us.
Oh, thank you for having me.
I want to get from you the thesis as it relates to shorting the Canadian banks and why now is the time. This call has not worked out for other hedge funds in the United States.
Sure. Well, it really comes down to China, actually, and the China credit bubble that we think is finally in the process of bursting. And I mean, China has, this credit bubble has been going on now for a decade in terms of the banking asset growth in that country, and the money has just been spilling over all over the world. But we think the capital flows now from China are really starting to dry up and possibly even reverse here.
So, Kevin, how does that, though, relate to Canada and the Canadian banks? Are you essentially saying that that the concerns out of China, that there's just been so much money flowing out of China into Canada, and that's really what's helped the Canadian economy?
Well, it's certainly been a boost, and I think a lot of people know that there's been a housing bubble in Canada, that the household debt to GDP has been inflated and been a problem for some time. Property prices have been rising for some time, but on the margin, it's really been, we think, the money flowing in from China that's really pushed prices up and forced Canadians themselves to have to stretch to afford housing. And really, honestly, we're 10 years into a global economic business cycle, and we really do believe there is a business cycle. And Canada, when you look at it, it's just one of those countries that has a really high debt to GDP ratio in its household sector, and we think the banks are really the ones that are going to be holding the bag on this debt problem. But Kevin,
walk us through how the
the Canadian banks are gonna, I don't know. I guess I don't really have anything to say. Oh crap. So I'll go to the next video.
So we're actually short Chinese banks, Australian banks, Canadian banks. Those are the three big housing bubbles in the world today. And we had a lot of success back in 2007 shorting U.S. banks during the U.S. housing bubble. We think it's an opportunity now with those three countries.
Do you think?
See how he said we had a lot of success shorting U.S. banks back in 2007. So obviously these guys have a good track record because they've already shorted U.S. banks in 2007. So he's basically saying that we're gonna have a market crash, and he's shorting Canadian banks right now, Chinese banks, Australia's bank. You know, anything that has a big housing bubble, and Canada does have a big housing bubble. Look at Vancouver. Houses in Vancouver are like ridiculous, like over millions of dollars, and Chinese investors have been piling a lot of money into basically like BC housing, causing the pricing to really increase dramatically. So let's go to the next video. Next part of thing.
50%. You actually think that the Canadian banks could decline to the tune of 50%?
At least.
At least, because of the asset write-downs. Even though the mortgages are not as big a percentage of the overall banks as they probably were in the States. And also, we don't have, I would think, the problem of securitizing all of these loans and all the derivative products based on that held within these banks and the counterparty risk. Wouldn't that be a positive that we don't have that?
Well, I think more of the mortgages are on the bank's balance sheet compared to in the U.S. that had a securitization market. But the problem is not just the mortgages. It's the entire economy. It's the global economy. I mean, there is a business cycle. There is a macroeconomic cycle, and it's really an asset and everything bubble. It's everything except commodities bubble in terms of equities, corporate credit, real estate, and private equity, private fund assets that courtesy of global central banks and the era of QE that we've seen in the last decade have inflated all of these asset bubbles to truly historic valuations. And it's a problem in the U.S. too. In the U.S., on a normalized basis, U.S. equity prices got to record valuations across every metric that you can look at. On the PE ratio, you need to look at normalized PEs, but normalized PEs are over 45 times. And this is higher than 1999, higher than 1929. So you know, there is a business cycle. That business cycle downturns typically start with security price corrections, with asset price corrections, that leads to broader economic problems.
Kevin.
So, if you look at, so these are the Canadian banks. BMO, as you can see, BMO crashed with the rest of the market, and you know, it kind of recovered like a V shape, just like the SPY and the Nasdaq and everything else. So I don't know, I honestly believe that, you know, if the Canadian banks are gonna crash, the U.S. banks are gonna crash. BMO is a $61 billion company. They had, I think their financials are on February 26th, I believe. February 26th, 2019, and the stock's been rallying on absolutely no news, just because the Nasdaq, the SPY, and the general stock market is rallying, so BMO's is following. TD, same thing, big V shape, crashed on December 24th, and then just rallied ever since then. CM, Canadian Imperial Bank of Canada, a $49 billion company, also had the same scenario. December 24th, the lowest point, then it rallied all the way back. So, I mean, if, you know, I'm just saying that if he's right, he's probably, we're going to be heading for a market crash. Royal Bank of Canada, same thing, same shit. Same stuff, like same thing. It's crashed, now it rallied back. If it rallied all the way to 104, 105, then this guy's full of crap, and you know, the stock's not gonna crash, and Donald Trump actually saved the stock market, because that's what I believe. I believe that Donald Trump is gonna save the stock market because he wants to be president. But these are all the banks I was looking at before I was trying to find out the bank. And the last one, Canadian Western Bank. There's also another bank, but it's a private bank. But these are the 6 Canadian banks. That's right, Canada doesn't have any banks. This is the smallest company of the 3. of the 6, sorry, it's $2.58 billion. It's kind of hard to imagine to short a bank that's already has such a small market cap. Smaller than freaking Aurora, and the bank. And then before I go, I just want to say that the Keystone Pipeline on February 2nd, 2019, that was yesterday, they announced that the U.S. appeal court is going to be blocking the Keystone XL Pipeline, which is developed by TransCanada, and Alberta is the biggest oil producer. So Alberta is going to suffer, and this could cause, a lot of layoffs in Fort Mac, and really hit a recession in at least Alberta and possibly Canada, because it'll resonate throughout the country. TransCanada, I think TransCanada is gonna plummet tomorrow, like 5 to 10%. That's why I believe. So we'll see though. I think we're gonna have a horrible Monday, but I could be wrong. Let's see what happens. I'm still in cash, so I'm still hoping for a market crash. So anyways, this is it for the video. Thanks for watching, guys. I hope you enjoyed this video. Subscribe for future update. Give me a thumbs up. It helps my channel grow. And bye.